Hello trader, welcome back to this live session. Wednesday 28th of January 2026. Significant day in terms of our trading. Now looking at, before we begin, let's look at what's happening on the global context so that we have better understanding of the potential move in the market. Hope that all members are here. Let's begin a big trading. Awesome. Thank you very much. So let's first look at what's happening later today. And so with higher CPI that you can see on AUD, and we are going towards here on coming up FOMC statement and rate decision. I think that's gonna, this is a forecast for not hiking, so I think it's gonna remain. Do you think that it's gonna remain? How are you today? I'm good, thank you very much. Why no correction happened? It's happening now. We can see some correction. It's, in fact, if you look at the bigger picture, that it's a very strongly bull market, right? So in that bull market, we might see that the market eventually to, it's on a pullback, right? So one thing very remember, guys, this is the core of the trend. Is not, there's saying that, you know, if you look at any city, like there's a saying that Rome is not built in one day. Similarly, trend is not developed in one day. So it's not gonna also end in one day or one go. Not that is strong. That is a good sign. Good sign means, I mean that, you know, we don't want to take any side of either bull or bearish, or you want to take a side of trading with the trend. So if we look at that, the market now, the strength of the trend is high. So therefore, the correction, weaker correction, is a sign of trend continuation, the first thing here. Now, we see that there's a pullback now at the moment, right? If you look at the 4 hour, this is the starting of this move, and the market is now in that pullback. Usually weaker pullback. So there are some kind of, always you'll find an understanding of market movement. For example, here, if you look at, this is a very weak trend, right? In this consolidation, so there is a trend, and you will find some weak trend. For example, this is a weak trend. It's in a downtrend, but it's a weak trend. And you will find the same kind of trend. For example, here, it is in a weak trend. But when the market in a strong trend, the pullback will be shorter or smaller. And therefore, any dip on that is a literally an opportunity to go long. Now, if you look at, I'm looking at this 30 minutes on gold, and this market, if this is the 20 EMA, where are the swing low here? So there is one here, there's one here, there's one here. And if you look at, the market has just crossed this first swing low, right? That's where you can see that the first swing low is here. And because the first swing low is here, the market has just penetrated that swing low. There is a potential for reversal from here. Do you think so? Let's look at now the lower time frame to find an entry. And I think we are going to a zone where you can look for a potential entry opportunity here in that area. And with that being said, if we look at this lower time frame, this is the lower time frame price action in that area. So with this drop here, the market has just tested this. This is an order block as well. Now we might find a possible reaction or rejection of that key level. So if you look at here, now this is the 1 minute. We drop to the very lower time frame. Okay, so you drop to the very lower time frame here. Now with this lower time frame, expecting the market to potentially respect that level and then reverse of this support level. Now we can see some here is a 5 minutes drop, and I think if you look at the market left quite a few imbalance along the way. 5297 or above, 5300 could be that the market might be reaching shortly after, if the price successfully reverse off this level. Now we will be looking for a reversal trade here. Are you with me? Welcome. And in the meantime, guys, have you liked this stream? If you like, also YouTube algorithm will like it. So if you haven't liked yet, you can give a thumbs up, and let's get ready for a potential entry. And my bias here is potentially to reverse. What's your bias? I would like to ask you with a poll here before you enter. And FOMC coming, we'll be discussing about FOMC. What's your thought on that? So I've shared a pool here for you to potentially cast a vote to see that what's your bias today from here. And I think there is a candle close that on the 30 minutes chart after cross of this 10 and 20 EMA. This is another level that we could see if the market further downside here, further drop, we might see that coming to 5224 level. And okay, now what we are looking at in this area. Okay, so with this one drop here that you can see, it's a bearish move followed by narrow pullback, and you can see another drop. So far here it is local downtrend. Local means that the global, this is another important point. The global means the long-term trend and the short-term trend. So this is a pullback trend. That means that short-term trend in this market. And that short-term trend that you can see, it's in a downtrend, looking at this downtrend to potentially bounce off this level and then to reverse again back up here to the key level. Now I will be preparing for a potential bullish setup, as though we can see still here a possibility for deeper pullback or deeper drop. Unless we see a clean reversal, we are here but the bias here potentially to the upside. For me, what do you think? I've shared a pool, let me see that. And interestingly, the pool results come very, very predictable that we have seen in the past. So we'll be looking at to see. The market has left some imbalance here. Okay, so with that imbalance, the price may try to fill that now. Okay, so here we can see the lower time frame after creating a double top. Here with a double top formation, the market slowly, we could see that further bearish drop in that area here on XAUUSD. So looking at from that point of view, as with this bounce, there is a more double top, we could see now that the market to fill that imbalance here and then to potentially to go for another break. This is the recent high and some of the key levels that you could see the market to come back and retest. Now on the other hand, it is entirely possible to have further deeper move, and if the market breaks off this level, and I'm looking at as well the daily support. If you look at here, this is the daily support that the market earlier opened, and with this daily open, the price entirely bounced off this level here. I think still there are some kind of downside pressure that you can see in this area, but I'm not fan of against the trading against the major trend. Even if the trade not going in the favor, still okay. We'll be waiting to see the market to eventually slowly break that low here to this support. Now with this double top, the market slowly coming towards downside, and we might see the price to eventually feel that imbalance. And of this support, 5239 could be an important area that we can look for potential entry. Now, while we are looking at gold also, if we look at the DXY, we see there is a DXY was in a significant downtrend. Now DXY movement also will give us better understanding of the overall market with other instrument, right? So if we look at the DXY, 39.27 support. Okay, looking at 39.274 on XAUUSD. $39.27. What instrument that you are talking about? Okay, so with that on DXY, if we look at from the long-term perspective here on DXY with this doji, there is a daily bearish engulfer followed by, so far the market opened earlier with a gap, and DXY is, if you look at it, is entirely a bear market now, and with that bearish price movement, there is a pullback here that you can see. Now that pullback is, as there is a drop, that means that bearish impulse from the 10 exponential moving average from the 4-hour pullback. This could be a level that we can look for potential entry here in this market. Now this is the level we are not, I normally don't enter directly from DXY. Instead we can look at based on that on Euro USD. As FOMC coming on Euro dollar and British pound US dollar, you might see that the market to deepen further here to this previous swing low for upside here. So that all those USD pair on a pullback, so you can see the similar kind of market structure on gold, because if you look at that, more of USD pairs, they almost move in the same direction as gold, right? Now looking at here at this lower time frame, with this 3 rejection, so having an understanding of few pairs is always give you better edge of the market movement. It's called the currency correlation. When you look at the currency correlation, you can have better understanding of what other instrument are moving based on, let's say if you look at that DXY movement, you can understand how the gold will move, dollar yen, Euro USD, British pound US dollar. What else other currency correlation you can find out? If you look at WTI, that means US oil, also you can look at the dollar CAD move, how it will move, because they are mostly related instrument. So at the moment we are looking at gold and also few USD pair that we will keep on watch list. Now looking at XAUUSD, for us to be able to enter, you want to see that price action 3-5 minutes candlestick pattern has formed in that area, which is potentially showing that an upside bias back above this level. Ready for an entry? Okay. So the recent support, the market is now maintain a trend line here in that area. Okay, so which is a support line of this market. Now, breaking off this trend line is where you can look for entry to the upside. This is the current support level. Always look for the break of structure. That's where the best entry comes in play. If you look at that, all those strategy that you guys can see, for those who have joined recently on the academy, if you go to the course that I've discussed about the market structure and how our strategy works in a trending market, and when you can enter off the break of structure, you always have an extra advantage of trading with the smart money, because the market is eventually moved by the institutional flow. And if you want to look at the market that is trading based on the institutional flow, then it is always a good idea is to enter from the break of structure and looking for an order block, wait for the market to break off the trend, create a break of structure to give you better entry opportunity. So now if you look at here, this is a trend line and you would like to see that break of structure of that trend line to give you a move back to the upside here in this market. This is our plan here. Let's wait to see what is happening. Okay, so in the pool, 67% bullish, so far 33% bearish. So the market is in fact going in that direction, right? This is what happened when you see that, especially this is also sometime based on sentiment. Do you consider sentiment in your trading? Sentiment analysis is crucial if you are trading on higher time frame. On the lower time frame, mostly if you're trading on 1 minute, such as like we are doing 1 minute, 15 minutes or 30 minutes, lower time frame entry is mostly based on the event that coming in the news event. So if you look at the calendar, okay, so this is where because either the data coming is in favor or not in favor. Mostly the market moves based on those schedule, because when there is a, and if you look at this coming FOMC statement during that time, before that period of this meeting, the market will show extended volatility, and that's what we need, right? Because the market trends in those period, in those extended volatile session. Okay, so there is a breakup structure here that you can see in that area. I think the market slowly bouncing off this level, and with this break is where you can find that para trading entry. This is how you can, when you keep watching the chart for an extended time, you can understand how in actual sense the market really moves. I spend days, hours, months of time to understand in real market how they move. One of the ultimate goal that I think every trader should have, I believe that you guys also have, is to first learn and then find a system that can trade for you even when you are not there. And that's the end point, right? Once you have that, you are ready. So the learning goal should be that one, because human, as a trader, we all have emotional bias in trading, and it's very difficult to sometimes overcome. If you look at the institutional trader, they have this kind of setup that they trade using a very sophisticated system that keep them in this trading ahead. Now, as a retail trader, do you have that? You don't have, but you can have that, because the only thing that you need is to learn to see how the market really moves. Regardless of your background, you can automate, you can find a strategy that works. And in the academy, in Forex Trading Wizard Academy, we have the setup, and if any members want to learn how to automate your trading system, we can assist you. Okay, so you can contact, if you are in the academy, you can talk to the admin and get yourself to create a system that can trade automatically. To trade in 2026, in 2027 and beyond, I think that goal should be for everyone. Your goal is yours, but what I think that, share your goal. What's your goal? Do you want to trade, like, what's your trading goal for long term? So we're approaching the 1 hour close and waiting for the market to, here it is in an uptrend, and as you can see, it's maintaining that uptrending market, so you could continue to rise here back above. Okay, so here is slowly the market is showing its move back to the upside, and we want to see that breakout structure. Once the market breaks off this structure, we are looking for potentially entry, and we want to see that the trend line to break. Once the market breaks off this trend line, here we will be looking at entry. Okay, we're seeing some kind of pullback, and I'm waiting for this trend line. Now, risk management is a big, it's the most important part of trading, right? And to have that level of risk management where you can entirely manage the risk of each trade, this is where the high accuracy comes in trading. And to find the risk management, the best way is to have a tool that can assist you to manage your risk when you are trading. So this is the previous entry candlestick here that you can see, and so you had there's one signal here on the 1 minute chart. We are not here in this live session, and there is now the market. There was another one here. So looking at now this tool, for those who are using this tool, currently available for full automation, and it can be automated in both platform, on TradingView as well as on MT4. You can trade this trade directly automated. So for those who want to get that automated, if you are in the academy, you can ask the admin. So this now automation available for both TradingView as well as any platform that you are trading, because when you are trading, the risk management is the key, and when you automate, your risk management become much more reliable than ever, because you can manage the risk automatically as long as you are not interfering with your system or changing the strategy. Okay, now here with this breakup structure, the market's slowly trying to bounce off the level. We can look for entry because the previous level, if you look at again, this is according to the trade entry engine here on the 1 minute. This is the previous signal candle, and the market still didn't break that low. I'm waiting for the breakup trend line, and once we see the market has broken off that trend line, we will be looking at that entry. Now, especially if you are trading on 1 minute using this kind of system, entering as soon as the candle close, it takes some time. But if you are using manually, then probably I would suggest to go over 15 minutes where you have some time. For the lower time frame, it's the best one to automate, so that your reaction time is way less than you need it, because there is a reaction time, right? On trading on 1 minute, if you use to enter with the candle close, it's sometimes hard due to the reaction time that you need to think and do the risk management and then enter the trade. Or so here it's creating quite a few long week candles. Would like to see breaking below and off that, as this is the 1 hour candle close coming, and I think there might be some upside bias we can expect. I'm preparing for a potential bullish entry once the market managed to test this trend line or breaking back below, with proper risk management, of course. So if you are entering, make sure you calculate the lot size and everything so that you are not over risking or even under risking. We think that sometime, trading a very smaller lot is a good idea, is also a bad idea. Okay, trading smaller is not a proper risk management. If you're not taking the risk, also you're not gonna get the reward. Optimal risk is the proper risk, where you have the proper setup, where you have risk and also you have reward, right? This is the key. So you can open the lock. Now, potentially breaking that low. So approaching the trend line here, and it's interesting market structure, but I think it's bullish. Okay, so it's bullish, and potentially we'll be looking at entry, and there is no high impact news coming shortly, so also there will be a session open coming later, and this is the previous order block on the 1 minute. Would love to see the market to break that trend line. So it left a significant imbalance in that direction. So you want to find the right entry point. That's the key. So if we look at the market has broken out of that trend line, okay, getting some reaction back above. Okay, so with this drop that you can see on gold, and so it's on the order block now at the moment, and from here I will be looking to go long on gold and keeping stop loss below this swing low here with 73 pip stop loss, keeping the profit target to this nearest level of resistance line. The stop loss can vary little bit from this way or that way. The goal here is to keep the risk managed, not going over risking. The entry at 5250.96, and also I'm going to explain the logic, strategy behind the entry 5279.05, and so this is a open a buy entry of this for a potential reversal back above with full risk management. So it's on the order block, but expecting to have a potential reaction back to the upside. So there is a support, will be my entry here is at 5257.76. The key here is to keep the risk very low, because if I'm not right, I'll be exiting within a short period of time. You always have opportunity to enter again if we are not right, so that you can, trading is like that. It's just overextended back below, and might start to so this is an overextension point, and All right, so are you going to see that some kind of reaction here? Waiting to see the market to break that resistance goal movement. Yes, welcome. And we are looking at gold. We are expecting it to bounce off this level. So far, the market structure showing that there is a breakup structure, but this is 30 minutes price action. Here you can see the market again tested the 20 EMA. We're looking to see some kind of upside movement here in that market. And I'm nearly to the entry point. Looking for the market to go ahead and create a new higher high. Welcome traders, welcome back to the live session. And here what we are looking at in this market, the price to eventually cross this high, and I just have entered into the profit area, but it's still not longer. We want to see that going back again to create a new higher high. And there's a double bottom, and I want to see, okay, that's good. We see some kind of move, 48, 50 pip up, right? So we might take the profit as soon as it reach further. There might be reject. Come on, come on. Okay, so I'm taking the trade. The market looks pretty volatile. I'm taking the running profit here. Closing out. we'll be entering. Create a significant move, but we can see some kind of, it might creates a really interesting market structure. So I'm out with the trade with it's nearly to break even with me, but it moved a bit. What I have? Very little. I would consider it as a break even because around 10 pip for me. But it is a good move. You want to take it again. In the beginning there was a significant bounce, but I couldn't close the trade in time. Here we can hold on to that, but it might, the way it is creating the dodges, there might be a spike, and it's moving a lot here in that area. All right, so have we got it's potentially to break back to the upside here, and but usually when the market creates this kind of doji, there's a chance for false breakout. Okay, so what we are looking at now for a reversal, right? With this few long week candles showing that the market might go for another move here now. And from the lower time frame, if we look at I'm going to look at further entry. As soon as you will find that, we'll be looking for further buy entry. Now the entry logic is very simple. Here is the support, right? Here is the support. The market crossed that low, initially bounced, dropped to the same level with the same momentum, created an overextension, and the market now showing up to be potentially bullish. Now with a breakup structure here, we can look for that entry back to the upside here in that market. Trading with the trend is the key, and we are looking at for that move we are looking at so with this if you look at this is a resistance line here, break of structure coming here, and it's basically gathering liquidity of this support level. Still not entering, but looking at for potential if you look at the 15 minutes market structure is really doesn't make much sense to me yet. So deleting all those levels to see, if you look at the 15 minutes, quite a few long week dodgy up and down, didn't make much clear market structure, but that some of the price action might be showing up. So with this retest of this 20 EMA, we can see that the market slowly rising its bounce back to the upside here, and Okay, from the 4 hour, the market is almost at this level here. And this is a breakout structure. After this big trend, there is a breakout structure that you can see. And with this breakout structure, we might see the market eventually to move again back to the upside here in that area. Okay, so it reached the top. See the deeper pullback. Ready for preparing for potential further entry here. And the trend is continuing. We see that there is, after this doji series of higher high and higher low, but I'm trying to understanding the 15 minutes candlestick pattern, how they have formed. It's a very 1 2 3 4 dojis, and they are not fully, if you look at 1 2 3 4, it's interesting. Okay, with a bigger move back below here in that area. I think we might find the 30-minute candle closing as a doji. So this is the current low here at the 20 EMA. As I mentioned, this market structure was not very grammatical, isn't it? So it wasn't much more grammatical, but I think that's a preparation for okay, so with our first entry of this level, the market reached this resistance line, if you look at, and then had a breakout structure. At this point, if we look at with this long doji on the 30-minute candle closed, which is potentially to be a bullish price action here as well, that you can see it has created. And from the outside is still bullish. Okay, so if we look at an entry on the 1 minute, one of the complex thing that you'll find when you'll be trading is that because the market, you have a strategy that can give you that rule based that we run as well. If you're in the academy, you know that we have the rule based trading system, but the only thing happen is that when the market print the candlestick pattern, there will be more often very, very identical, so you can't match the previous situation with the new one. This is always new candlestick pattern is printing in the market that can change always every moment. So how can you in fact then automate your system if you want to create a system that can trade for you? Yesterday we discussed that you can find a kind of pattern within the random market. The market is random. It's like constantly there is a new candlestick pattern, new structure is being created, but you will find that you can resemble them with a shape. Okay, if you look at the nature, you can see the shape everywhere, so you can resemble them with the shape, and ideally any structure will be created if you see that it has created a false breakout in one direction. The market usually move the other direction. That's how you can understand that which way the market is preparing to be heading, and that's how we can enter in the direction of the trend. When you see the false breakout happen opposite direction of the trend, that's where the entry, because if the false breakout happen opposite direction of the trend, the market is likely to move in the direction of the trend, right? If you look at here, you can see that this is a support that when we have entered, where the false breakout here, if you look at, this is the previous support that the market has started to move up this level, followed by the market drop to that key support level, and it just has penetrated back below. it just had overextended of this level, and then the market just has got that reversed from this support level with one single impulse. That's a false breakout, and as a result we can see the market has moved up that level to the upside to create a new higher high. Right, so simple way. Now the market again has broken, but if it has created a false breakout of the previous swing low, which is here, that is where the entry is again. If you look at this, is the previous swing low, which is the key support level, and as this is trending now, creating series of higher high and higher low, we are looking at this market to give us now entry after creating a false breakout of this support level. That's the key here to look at. All right, so in this area, if we look at the market is maintaining that uptrend, and we are looking at the price to continue to drop, and if the price breaks this low here with this false breakout, we can look for another entry in this market of this to the upside. So you can see slowly it's trying to build that momentum back to the upside here. So with this structure formation here, it's currently moving in a sideways. I think the market is now looking up here in that area. So with that movement back to the upside, we are looking at here for an upside bias. So it had been broken back below here, so therefore the possibility to continue to rise, and I might prepare for an entry here. Can target to 171 pip. So I'm looking at entries, so I'm going to go long here, little bigger stop loss, 107 pips, so it's has to be fully, everyone stay good with the trend. Yep, we are looking at here in that area, and the stop loss here with 5259.36 and TP target setting at 5285.65. So open long here, as there is a fair value gap. If you look at this, is a complete bearish fair value gap, and looking at that bearish fair value gap to be filled, okay, so looking at, it tested the upper shadow, and so this is a bearish fair value gap if you look at here in that area, and this fair value gap, if the market, usually when the price reach those fair value gap, this is an imbalance in the market, and the market to eventually break that high, potentially to create a new higher high. That's the usual rhythm in the market, and therefore expecting it to bounce off, and we can see some significant effort from the buyers. Now, trading fair value gap is when you can enter in the right time to access the fair value gap. That's where the higher possibility in the market. Now, if you look at the lower time frame here, that we can see there is a 1 minute trend continuation here, right? So there was a breakup structure, false breakout. The market has done multiple times false breakout along the way, which is showing that there is a possibility of trend continuation. Now, if the market continuing its move, the next liquidity zone is here above this swing high, is where there is a high area of value, and that is we're expecting the market to push back above here to create a new higher high in that market. So we'll be waiting to see how the price is moving in that area. You guys doing that with me. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so you can enjoy this trade here. in this live session. Also, it's moving up that here, and I'm holding on to that. You want to take it the full. It's now up 32 pip. There might be some up and down. How is that FVG? Okay, so fair value gap is an imbalance in the market. There is a, if you are in the academy, you can find the GPS of the market. There is a lesson available that also clarifies about the fair value gap very clearly, but here I'm going through in a short way that the market follow a certain trajectory. Okay, so there is a language in the market. Everything has a language. The market also has a kind of language that you can understand. So the language of the market is not alphabet or any kind of language, is the language of pattern. Okay, so if you look at that, the market either will move up, down, or sideways, right? There are only two directional move, either up, down, or sideways. Now when the market moving up, it has to move in a trend for a healthy market. Okay, there is always trend within the trend. You will find that. So when you see that the trend, then the trend also has a starting point. And when the trend started, it forms an order block. That's where the starting of the trend. And once the market move with a trend, the rule of thumb is that a move followed by a pullback, another move, break of the swing high, coming back to retest the previous swing high, and then going back up to create a new swing high, coming back up to retest. This is the language of the market. However, you will not find always the perfect move in the market. You will see the market will create a move followed by this pullback and then another move, and it will leave an imbalance in the market, right? So that imbalance is fair value gap. That means the market has to balance at some point what it left as an imbalance. There's no very different with the market in this universe, right? The universe also constantly strive for balance. And that's how the market also strive for balance. And therefore, if you look at this downtrend here, that you can see, the market left this imbalance drop here, and with this imbalance it has left. Now it's going with an uptrend to fill that imbalance and then potentially to fill that. Now there are quite a few break of structure you'll find along the way, but this is how the market usually moves over the long term. All right, so now here 15 minutes candlestick pattern closed with this green candle. It's trying to break below. today's market structure really very interesting. But here now, after formation of this doji, we might see now deeper pullback, but I'm still holding on to that for the market to eventually go back and feel that imbalance and to return again back in the direction of the trend. So getting some reaction of this support, and if this is a false breakout, we will see that the market is going back again to create a higher high. Now always have to have a plan B in trading. That's what the trading is. Creating that upside here, and cool. Looking forward to see the market to push that price back above to the new level. Okay, so it's slowly building that momentum. It's slowly trying to break that high and expecting it to go ahead and create a new higher high. So we're looking to see the market to create a new uptrending market structure here in the daily. Patience is key in trading, as we discussed. And if you guys look at interestingly that, I sent a pool. Whenever I'm sending a pool, guys, don't miss out. If you look at the pool here, I'm ending that pool and you can see that the results coming on the chat. 71% was bullish, that the pool was sent early enough. And interestingly, every time the vote coming with the pool is reliable. Interestingly, 95% of the time it came out to be true. I think more of the time. So every time when sending a pull, make sure you cast the vote and wait for the results. That stunning, and we can see the market is reflecting that pull, because there is a reason. The market actually is a reflection of the buyers and sellers belief and activities, right? What you believe, the market also move in that direction. Okay, so because if more traders believe that the market will go up, they buy, the market goes up. Now we see that it's pushing in that direction, and we want to take this one as well up 57 pip. Going up, expecting further upside here. I'm also ready to take profit, but I'm still running, guys. I'm still running. Wanna hold on to that. Also join Telegram. I do share many of my trade ideas, also the analysis, education, regular updates. Also there is more often promotion to join the Premium Academy, where you can access all my strategies, trading tools, as well as indicators. So stay connected by joining the Telegram. You can find link below this video, and also I have shared in the live chat, where this is a pathway to access the Academy for everything, that automated system, including the indicators and trading tools. Okay, so here with this movement on XAUUSD still showing that bullish, and I'm still on the trade and still holding on to that for accessing. We have few members on board yesterday. Thanks, and also congratulations for taking your first step or the middle step to take your trading to the next level. For those who are in the academy, you know that we have a very sophisticated and updated trading tools and strategies that can change how we look at the market. It's all about staying in the edge, right? How is the robot trading doing? Okay, so we are having the incredible trading tools. It's trading in fully automated system that we have, and we have separate group on that one as well. For those who are in the academy can access, and we have the members who can endorse what already I'm discussing here. This is what we aim for since the beginning of this academy, and we have been able to achieve, and further progress is waiting, as we are trading on 2026 now, and everything is upward, right? If you want to trade in 2026 and 2027, there is no alternative but using a strategy, a tool, and the system that can take you with the time, right? It's now time to upgrade your system, upgrade your trading style, and simplify. Simplicity is the key, right? The more tech or the advanced you will become, the simpler things will become, and that's what it is now. So there is a saying that if you are not making money when you are at sleep, then you are not financially free. You can't trade at sleep unless you have that system that can trade for you at sleep. I'm holding on to that. Let's see if we are keeping it here at 60 pip. How is the doing robot? Results speaks for it. Okay, now it's pushing back here and progressing towards the imbalance to area where I'm running it with 90 pip, 96 pip. With 100 pip I might exit. Okay, I am exiting. We are nearly to 100 pip. I'm going out with this trade, guys. Taken, because there might be deeper pullback and I don't want to go back anymore on that one. So gone that. Might vary little bit with you, but profit taken. Session open right now. Is still there is a lot to take from here. Now before we progress to the next trade, guys, make sure you like this stream and also subscribe to the channel if you haven't done yet. Stay connected by joining. You can find link below this video for the general Telegram that you can find. The premium Telegram only link available on the student dashboard of the website, but free Telegram you can access it now below this video. So let me share with you where we have we do send promotion in the free Telegram along with education to join the premium as well. In the free Telegram I do share regular trade updates, ideas as well as educational content to keep you informed and updated, because the goal here is to help the community, every trader in this planet Earth, to help to gain access to the trading system that they can rely on. They can trade when they are at sleep. So this is our mission here, is to already developed to give and to scatter this system to every member in this planet Earth who want to become a successful trader. And it's coming time, right? 2026, 7 and beyond, things getting simplified. Okay, now we are looking at further entry later. It's not over, it just started. All right, now fair value gap we have traded. See some pullback here. Now so for the entry that you have entered now, just to have a review of this trade, is a pullback still due? Now the pullback, I think it's ended. If you look at the 4 hour, you can see there was a drop, and after breaking this low, the market again bouncing off that level. So therefore here the possibility that the market, if you look at after this crossing of that fair value gap, the market rejected off this level and could reach that 5311 or even beyond to the upside here on XAUUSD. Therefore there is still, if you look at it, has significant imbalance also in that direction here. Right, so we could see the market eventually to crossed further back above here. Now we are out, but still once it creates another opportunity, you can look for further entry. And in the meantime, if we look at the current entry, what was the criteria or the logic, if you, there are many names, the rules for the entry, because this is where you start to gain knowledge. Now once you see that, guys, keep in mind that once you see an established trend, you found the direction, the next thing is, with the trend, look for the liquidity sweep. What is your rule to take profit? Always keep rule mostly for the stop loss. For the take profit, you can keep your win rate high. The rule for the stop loss and the risk management is the most important rule. How much risk you are taking each trade. Most traders focus on profit taking. What will be the rules for the profit taking, or how much profit you should be taking, because we think of and we don't think of how much risk is going behind for each trade. If you can keep consistency on your risk management, the profit will come automatically. Because my rule for profit taking is very unusual. Let me explain, see how it suits you. The rule that I use for profit taking, the first thing that I make sure that I have a high win rate. All right? Number one. Number two, the profit taking rule varies for my past few trades. Guys, this is probably you have never heard that way. But see how it's, because it's a psychological. Trading is more of psychology. When you're trading manually, because the automated system is different. We have the rules, we have the system, it hedge, it does everything itself. But when I'm trading manually, it's a different rules, because trading is more of psychological than anything else. Now, my profit taking rules depends on my past few trades. If I have consecutive wins, I keep my, if you look at the previous trade that we have closed, have you seen that? We closed with less profit, but the next trade is bigger profit because I have backup. I have 2 wins that can back me up for the next trade. But if I have a loser, then I keep my win rate higher to make sure that I'm not falling into the trap of continuous losing. Because when you have a bigger, unusually bigger profit target, you have to accept quite a few losing trades. And that's where sometimes will break your confidence as a trader. So therefore, the strict point here is to look at your stop loss and risk per trade. And then keep the win rate high so that because as long as your account is growing, as long as you are winning, your account is growing, everything follows it, right? Regardless of what strategy you are using, when you look at your trading account is growing, you feel, okay, I'm trading well, my trading is going well. That's where the focus is. It's a kind of adding to the winner, right? This is how trading works. When a trade wins, the successful trader, they keep adding to the winner. So when you win, increase it a little bit, increase it a little bit. Now, I don't trade feeling. You have to forget about feeling as a trader. Okay, we see that there is a breakup structure. Now, if you look at here, okay, you can keep 5 times and it's gonna straight drop back to your entry again. Okay, now coming up FOMC, if you look at in few hours and a pretty big day coming up. Also CPI. We'll see that tomorrow also coming unemployment claim. So big week. Next, today is Thursday, right? It's now after. So we have today is Wednesday, Thursday, 3 trading days still remaining. Okay, now going back to what's happening with currencies, euro dollar and GBP USD. There we can see that on DXY. So far there wasn't bigger move is because of the upcoming FOMC. So this one as well potentially to give a higher possibility for an entry. And so looking at on going back to gold, so with DXY on a pullback, gold also you have seen that has done the pullback, and now this drop that you can see, it's potentially coming back to this order block again. We're currently waiting for a buy or sell. I'm not any directionally biased yet. We need to wait for again to show up a new market structure, a new directional bias, and then we can look at that entry, right? So if you look at here, this is a lower time frame trend. The market trend is still bullish, but you want to see that it has again done enough pullback. This break that you can see here is potentially a break of a structure here. So slowly the market is potentially creating an uptrending market structure here in that area. Now trading, let's delete all those lines to look at from the fresh chart here. This is what I call, because especially if you are trading on lower time frame, when you look at the 1 minute or 5 minutes, they are very lower time frame. They change the market structure very, very frequently, right? So that's why it is always a good idea is to look at from the fresh perspective, right? Because the market structure is constantly changing and the market is evolving, that I would say that in a new way every moment. So the reason is, whenever, let's say 5 minutes, 10 minutes, 15 minutes earlier, what you saw in the market, what directional bias has probably entirely has changed. And this is also a large part of developing trading psychology, because if you really want to build up a healthy trading psychology where you can see yourself as a successful trader, is to rewire your brain for seeing the clear picture, right? Because usually, let's say we are very emotionally attached to the market will go up. This happens, right? As a trader, we insist the market will go up. This is how every trader first think. Market will go up. When a trader take a trade, they have a very stronger conviction that the market will go up or down. If they buy, then definitely they have very stronger conviction that the market will go up. Otherwise, they wouldn't risk their capital on that. And then in 15 minutes, 30 minutes time, when the market changes direction, changing that conviction, changing that belief and taking another side is sometimes difficult, right? Because our brain is wired to always, stay in what we just thought that will happen. That's why switching direction very fast, accepting the fact that the market will change direction and I have to trade differently. That's another practice. Okay, so here it formed this double bottom and looks like the market is still remaining here bullish. So with this doji, the market slowly forming this bullish market structure in that area that can lead that market back above. And if you look at later today coming FOMC statement, now this is another important part of becoming a whole trader. So being whole is important, right? There is a saying that you want to be happy or you want to be whole. It's two different sides. Now, when you become a whole trader, you actually look at all sides and understand all sides of all dimension of trading. Okay, how many dimension in trading? Look at that, guys. Technical, it's a very smaller part of trading. Technical analysis, understanding trend, market structure, liquidity, and price action. Okay, so for a beginner, it's all about technical level 1 trading, that I would say. Level 2 trading is when you understand the fundamental. Okay, fundamental means that how this data influence the market, the directional bias, especially trend and all of that. Level 3 trading is a professional trader who has developed a very strong trading psychology, can handle the risk, can handle the emotion, can manage the risk, can manage the emotion in trading. So with these three, a trader become a complete professional trader. But there is missing something here, right? That is the level 4, which is the 4th dimensional trading. This level 4 is gained by few individuals who stay above all of these 3 levels trading. Okay, so level 1 more often can lose money. Level 2 can remain break-even or losing. Level 3 can remain in break-even and profit. Level 4 is where you become consistently high level profitable trader. Level 4 is when you have understanding about the timing, the fourth dimension that I would say that in trading, that contextual market movement. Why the market is moving the way it is moving. When you have that answer, when you know that why the market way it is moving, you are at level 4. And to gain level 4, once you are on the level 4, you can adjust yourself every moment when the market changing, and you can also trade. You know exactly at any point what the market, why the market is doing is the way it is doing. This is the first thing. And you can also predict many of the market movement even before it happens. So also you know that when to trade, when not to. Many of the important factors that you can consider when you're looking at this kind of trading. So that being said, and here our goal is to create level 4 trader. We have many of them. Okay, level 4 trading needs experience. You dedicate yourself some time in trading, and that's what the purpose of live session. We have a system. Many members are using the system, but using the system alone, you will not be able to be a level 4 trader. You need to give yourself some time to learn to grow as a trader, because knowledge is power. So now aim yourself to become the best one as a trader, and here every resource available. Okay, now what we are looking at, the lower time frame. If you look at break, again trending, and further entry for us to go for another entry. We had a big trade, little bit of break needed, and then we'll be looking for re-entry. Quite a few trades coming with the FOMC as the news coming, and also these are some market mover. So it's the POC. So quite a few big news coming shortly. We have seen that with the calendar. So tomorrow, that means today, it's in just a matter of an hour. So monetary policy views related. This will have significant relationship with dollar CAD and WTI. So what's happening with the WTI? If you guys look at anyone trade oil, it's significantly bullish if you look at. And also if you have looked at the oil analysis that was made during the weekly forex forecast, now oil has changed its trend. Keep in mind, traders, oil is highly news sensitive, and so when you're looking gold, and today is very sharp bullish. We looked at here, and we are looking at also, we already have a big entry here. Now with oil, if you look at the monthly at the support and got a rejection of this. There's a lot of dramatic movement that I have seen in my whole trading career. So anyone were here in 2020 when there was a negative drop on oil during the pandemic. It's an unusual move, and then that took its up back. That has gone unbelievably high in 2022. Now this move, I think it's during the war situation here. So here this move, this is the pandemic move due to the shortage of like demand during the pandemic. All the airlines and car were turned off, and like due to the shutdown, and it dropped to the negative, took the peak to the war. Now it's potentially going towards that direction. Keep in mind, when there is a very stronger move on oil, it signals potential something coming up. And that is, we see that oil is at the moment bullish. We might be also find, because oil market, when it trends, it becomes very predictable trend that you can see the market structure. Quite a few liquidity sweep here, breakup structure, all those breakup structures showing that there is a potential for a trend. Now with the oil, gold as well showing the same movement in that direction. So that being said, we will be waiting. I will be also opening few position on oil. We trade all those instrument, currency pairs, and also oil. And with the dollar CAD, if you look at as coming up later today, just dollar CAD. Boy, you can't see that. Okay, so with the dollar CAD we can see that as we like dollar yen, USD CAD also there is the trend is bearish on USD CAD. So with the USD CAD, if we look at one significantly important price action confirmation here, so USD CAD trend is, we can see there is a downtrend here, and so with the upcoming USD CAD news, the market might create further trend here in that direction. Coming back to gold, so few instruments that we will be looking at entry with further movement here in that market. So gold is now here, it's on a deeper pullback, and with that pullback we could see the market to eventually create further movement. Another important, before we progress, this is very important guys, as a trader, as I mentioned earlier, that the fundamental is a big factors of becoming a level 3 trader, right? Just from purely technical to understanding the fundamental. Keep in mind that when you see that currency, there is a misunderstanding that, let's say if you see that one currency is bearish or bullish, does not define its economic strength. Keep in mind, because it depends on many other factors such as the export, import, your which way. If you look at the JPY, many years JPY always bearish, but if you look at the economic strength is not JPY. Japan is not a weaker economy, right? But their currency, due to their policy, they always keep their currency weaker. It entirely a policy. It's to reduce, is to keep the inflation lower. This is where the key. If you can keep the inflation low, but at the same time growth higher, because they normally contradict each other, right? When there is a higher growth, you'll see the inflation will kick in. So that's where the strength remains, when you can, when there is an inflation and the growth, the balance, and the currency strength will be determined by many factors that usually depends on the country's import and export, how much they are importing and how much they are exporting, and their policy based on that. However, it's not our that much of concern as a trader. Our concern here is to know that either what we are trading, how the upcoming rate cut or rate cut decision is fundamentally influencing the directional bias of an instrument. All right, so it was a great session, all of you guys, and we had 2 trades. and looking at further entry later during the NY session, and also coming later. If you look at here, we'll have FOMC statement later, and that will create a significant volatility in the market. I'll be coming on live again tomorrow again to trade this news as well as other fundamental factors coming in the market. Also another pullback in gold, sir. Yes, so another pullback. This might come little deeper here. So if you look at, it might come down further deeper here. We'll look at that one here as well. So that being said, thanks for joining this live session, and I will be trading till the end of the NY session. If you guys on the premium, will definitely will share some of the feedback in the premium group. That being said, thanks for joining here, and I'll see you again guys very soon for trading live tomorrow again. Until that, stay well, stay happy.